Welcome back to the channel. Today we're revisiting Senseonics Holdings with some new developments. So in the previous video, we actually discussed the implications of a reverse stock split, but today we've actually got some good news on its cancellation. Plus, we'll dive into the latest updates and what they mean for the stock, which has soared 61 cents overnight. So starting with the business updates. Senseonics Holdings announced preliminary Q4 2024 revenue of $8.3 million and full-year revenue of $22.5 million. The company also reported significant growth following the FDA approval and launch of the Eversense 365 system, their implantable continuous glucose monitoring system. So some of the key achievements include a 56% increase in global patient base to 6,000, reaching over 1,000 U.S. prescribers in 2024. Post-launch indicators show doubled direct-to-consumer leads in Q4, a record high monthly patient shipments of 600 in December, and a 49% increase in patients switching from competitors. The company maintained approximately $74.9 million in cash and equivalents as of December 31, 2024. Senseonics also canceled its planned special meeting for a reverse stock split, citing recent share price appreciation. The company expects positive revenue growth in 2025, with detailed guidance to be provided with full fiscal year 2024 results. Moving on to the stock performance, the stock price has actually made some headlines, jumping to 61 cents overnight. This increase follows positive business updates and notably the cancellation of the previously announced reverse stock split. In our past video, we explained that a reverse stock split would essentially just consolidate the shares to increase the price per share. However, Senseonics has now decided not to proceed with this action, indicating that they see the current share price as stable or expect further natural appreciation of the stock price. So something actually might be brewing with the stock. Some of the strategic moves moving forward, Senseonics is pushing multiple growth vectors with multiple patient numbers growing by 56% to 6,000 users. Their Eversense 365 product is seeing increased adoption, which is a positive sign for their market strategy. So the cancellation of the reverse stock split further shows confidence in their current market position and future growth prospects. And another thing that I've just kind of mentioned in general is the number of ads that Senseonics is putting out. Before I started seeing ads on NutriSense, the CGM from Dexcom, and the Freestyle Libre, but now I actually started seeing some ads from Senseonics, which I actually posted on my thumbnail on this video. So if you check it out, it has one lady to the left and one lady to the right. The one on the right has like 12 different CGMs on her arm, and the one to the left only has one CGM attached to her because that's what the 365 is supposed to do. You're just supposed to have one, and that's pretty much it. And you get it replaced every year. Moving on to the risk section, so it's important to consider the risks. While 6,000 patients is a good milestone in the grand scheme of the diabetes market, which is approximately like 365 million patients, it is, in the grand scheme of that, it is still relatively small. This indicates that Senseonics has a significant amount of market penetration yet to achieve. The company's success will heavily depend on scaling up, managing their manufacturing, and navigating the competitive landscape of CGM technology. There's also the risk of regulatory challenges or shifts in healthcare policy that could impact their operations. But overall, these updates are positive news for Senseonics, indicating that they are on the right track. I am holding my shares still on SoFi Investments. I'm holding approximately 71,000 shares, and I did average my price down to approximately 45 cents. So it's currently up close to 30% right now. And my current plan with these shares is basically to hold, hoping that the stock will continue going up, or a competitor will actually buy them out, or I'm waiting for a big announcement about whether they will will have implementation with an insulin pump as well. And I think that would be great news for the stock. So I'm waiting. Otherwise, I am hopeful for the future. It is a very competitive market, so I am kind of still shy of this market because of that fact that we have Dexcom, we have Medtronic, we have Google with their Freestyle Libre. So it is very competitive still, but no other stock right now has a CGM that lasts a year. So that is why I am bullish for this stock. I hope that it does continue doing better over time. So, and let me know what you think as well in the comment section. Do you actually own any of these shares? Are you selling? Are you holding? Are you just watching? It is very risky. It is a very risky stock. It does have a history of going to $4 and also dropping down to 26 cents. So it's definitely one that you have to really think heavy on. Don't put too much money on it if you're not willing to lose that money. Otherwise, to sum up, Senseonics is moving in a promising direction with their latest updates, the cancellation of the reverse stock split, and the growth in their patient base. These are all indicators of potential growth for the company, but investors should be aware of the risk associated with the scale of their current market and the competitive environment. If you're considering investing or already have, this is an exciting time to watch Senseonics. So thank you for watching. Don't forget to like, subscribe, and hit the bell icon for more updates. Thank you.